Ladies and gentlemen, good day and welcome to Q2 FY24 results conference call of PCBL Limited, hosted by ICICI Securities. As a reminder, all participant line will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sanjay Jain. Thank you, and over to you, sir.
Hello everyone. Thank you for joining on the PCBL Limited Q2 FY24 results conference call. We have PCBL management on the call, represented by Mr. Kaushik Roy, Managing Director, Mr. Raj Gupta, Chief Financial Officer, Mr. Saket Shah, Head Investor Relations, Mr. Pankaj Kedia, Vice President, Investor Relations. I would like to invite Mr. Kaushik Roy to initiate the call with his opening remarks, post which we will have a Q&A session. Over to you, sir.
Thank you so much, and good afternoon, everyone. And a very, very warm welcome to each one of you to this call. First of all, I'd like to wish a happy festive season ahead. And additionally, I'd like to say that some of the points which some of the statements made in this call may be forward-looking, and a disclaimer to this effect has been included in the investor update shared with you. Now, coming to the performance of the organization, PCBL reported a strong quarter with highest ever volumes and best ever quarterly financial performance, despite the worsening geopolitical scenario and economic issues. During the quarter, our consolidated sales volume was 130,111 metric tons, which is up by around 14% on year-on-year basis. While consolidated revenue from operation was rupees 1,487 crores. The drop in revenue is primarily on account of drop in crude price from an average of $112 a barrel to $88 a barrel year-on-year basis. EBITDA grew by around 25% year-on-year to rupees 240 crores, translating to an EBITDA margin of 16%. EBT stood at 172 crores, while PAT increased to 123 crores. Consolidated EBITDA per metric ton stood at 18,427 rupees. We have already shared with you that we have commenced our commercial production of the final phase of Chennai plant, which is 84,000 metric ton per annum. With this, our total installed capacity of the company now stands at 770,000 metric ton per annum. Gross. We have also commissioned the cogeneration captive power plant at Tamil Nadu site, having a capacity of 12 megawatts. With this, the total cogeneration power capacity stands at 110 megawatts. During this quarter, PCBL Tamil Nadu achieved production volume of 9,410 metric ton and a sales volume of 9,008 metric ton, which is roughly 50% of capacity available during the quarter. We expect further ramp-up of Tamil Nadu facility with approval from major customers expected over a period of next few weeks. Of the total sales volume, domestic sales volume stood at 82,276 metric ton, while international sales volume stood at 47,835 metric ton. Moving on to our segmental performance, tire accounted for 79,793 metric ton. Performance chemical reported sales volume of 34,744 metric ton. We also achieved specialty sales volume of 15,574 metric ton, which is the highest ever in our history. We continue to expand our product portfolio and customer base. The volumes with our recently launched Energy brand is gradually picking up. Samples have also been sent to one of the major EV battery manufacturers for bulk trial purpose. We also achieved highest ever power generation and sales volume during the quarter. Power generation increased from 156 million units in Q2 FY23 to 167 million units during the quarter, with external sales volume of 103 million units as against 95 million units in Q2 FY23. PCBL's average realization stood at 4.06 rupees per kilowatt. With commissioning of 12 megawatt CPP at Tamil Nadu, power generation and sales volume would increase further going forward. PCBL also secured 2 patents in relation to oxidized and surface modified grades, which further strengthens the specialty portfolio of the company. Oxidized grades have applications in inks and coating applications, while the surface modified grades improve fuel efficiency and tire life. Long-term prospects of specialty segment look very positive, and we believe that there would be adequate business potential to sustain the growth momentum. Considering the changes in global supply chain and consumption pattern, demand and margins in this segment should continue to remain strong. Structurally, we are increasing resource allocation to this segment. Let me now talk about current market scenario and outlook. Domestic tire segment demand continues to remain robust on the back of healthy performance of both OEM and replacement segment. We expect the upcoming festive season to provide further boost to auto sales. Industrial long-term demand supply scenario continue to look favorable. The pillars are that the industry is going to remain in a tight supply situation for years to come. Only one major concern that remains in the worsening geopolitical scenario. While we do not have much trade with conflicting countries, there may be indirect impact due to trade route disruptions, high oil prices, and inflation. We remain watchful of the developing situation and continue to work on strengthening our supply chain, improvement in our product mix, and cost optimization initiatives within the company. With this, I conclude and open the floor for your queries. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Getan from SMIFS Institutional. Please go ahead.
Yeah, thank you for the opportunity. Sir, first question is, sir, onto the specialty black volume. Sir, on quarter-on-quarter basis, there is almost a 30% jump into specialty black volumes. But sir, despite this, our gross spread has been almost flattish. Like I believe, sir, this is commanding almost 2 times the gross margins as compared to the conventional grade. So this jump in volumes has not been translated into your gross spreads.
So the gross spreads, Aditya, has gone up. What you are looking at is the consolidated number, and Tamil Nadu still, is not fully operational. Though we commissioned the line towards the end of September, we still don't have approval from major customers. That is more of spot market sales, and realization is a tad less than what normally we get in PCBL. So that is also kind of having a cooling down effect on the gross margin. But having said that, overall gross margin has gone up. On a standalone basis, if you look at gross margin, PCBL, and which will be more reflective of the change in product mix. Our gross margin per ton has gone up from roughly 33,700 to 34,700. So there's a 1,000 rupees, improvement in the gross margin.
Okay. And sir, on quarter-on-quarter basis, also the domestic sales volume has been flattish. So what is the reason for that?
Domestic market continues to remain a little oversupplied. A lot of capacity came up in last 2 years, and therefore we are pushing more material in overseas market.
Any recent competitors, sir, which have expanded the capacity recently?
Any?
Like of yours?
In last 2 years, most of the manufacturers added capacity. So Epsilon capacity came up, Continental added capacity, Madhuri added some capacity, BKT added capacity, and we also added capacity. So if we take market, domestic market, it doesn't quite absorb this capacity. But if I look at, our performance from overall capacity utilization perspective, we are almost operating, if you leave aside the Tamil Nadu plant, which is got commissioned, most of our facilities, if you look at all the 4 plants, they are operating at almost at full capacity level.
Okay. And sir, onto the gross spread guidance, like you had said earlier that that would improve by rupees 1 per kilo till so for the next 2 to 3 years. So does that hold right now? Because currently only we are standing at a very high spread number. So that will remain constant, or how you see that going ahead?
Long-term guidance remain as is. There is no change in long-term guidance. And we believe that we should be able to deliver that.
Okay. And sir, the last question from my side, onto the export market. So I believe that we are selling almost 15 to 20% to Europe, and some of the quantities also into the United States. So currently also we are facing some issues like demand issues, or there are any sort of short-term hiccups, which is like holding back your volumes over there, and that could improve over the short term. Like, how is the trend and demand into this international market?
There will be, this should be looked at from 2 different point of views. One is long-term, strategy of the company. So in Europe, we did not have much of a market, and structurally we are trying to become big in Europe. So going forward, if we are talking about next 4 to 5 years perspective, Europe certainly has a lot of potential and going to become big market for us. In short term, because of all the volatilities which are there in the market, our objective is to ensure high capacity utilization. So whichever geographies offer scope and potential, we will move our material there.
So currently the markets are weak, or like
geography-wise mix in the interim might change, but structurally we are focusing big way on Europe, and therefore we have also opened up our own offices in number of countries there.
Okay, sir. Thank you, sir. Thank you. That's it from me.
Thank you. The next question is from the line of Riya from Equitas Investment. Please go ahead.
Thank you for giving me the opportunity, and congratulations on good volumes and specialty after a long time. My first question is in regards with the demand coming from the international market. Are we seeing volume growth here? So which geography are we seeing this particularly? I suppose you just mentioned about Europe. So could you elaborate more?
We are present here in more than 50 countries now.
Right.
Like I said, all geographies are important for us, but we are trying to focus more on markets which hold bigger potential and where our market share is still not as high as we would have wanted. So while, like in the interim, till the time this global, this trade disruptions or slowdown is continuing, we'll have to ensure high capacity utilization by looking at opportunities wherever it is available. And structurally, in some of the geographies, we see big potential where we are investing in our own supply chain capability, which will create, foundation for larger trade volume in these geographies for us.
Right. So this particular quarter, no one geography contributed majorly for the growth.
So it's a mix of, all the countries where we sell, and Asia Pacific still remains big for us.
Asia Pacific was the major.
It is major. It is almost accounting for almost 70% kind of market outside.
And in terms of specialty black newer capacity, the additional 20,000 space too, when do we expect that to come?
It should take, I guess, about a year's time.
So maybe October 24?
Yeah, around, so roughly 4 quarters time.
Okay. And do we see this kind of like 16,000 tons quarterly run rate for specialty to sustain?
We will hold on to our yearly guidance. I think we should be able to deliver that in this year.
Okay, because I think for Q4 we had guided for 16,000, so we've already achieved that. So just wanting to have a true sense on it. Hello?
Yeah. As I said, we hold on to that guidance.
Okay. And in terms of margins, like specialty, since we have got two new patents, could you elaborate more on that? What kind of process patents are they, and what kind of any quantitative numbers, if you could give across, that what kind of cost saving or something like that value added would give us?
So these are kind of newer grades in the market, and the potential for volumes in these grades would increase gradually. As of now, based on our capability and all, we see maybe an annual volume of about 60,000 tons annually.
Sorry?
Yeah. So initially it will be little.
Hello? You're not audible. Hello?
Yeah. So in terms of market potential, I'm talking about us specifically. So initially it will be about 2,000 tons, and in 2-3 years' time, we expect it to be 3,000 to 7,000 tons.
6,000 to 7,000 tons. Okay. Thank you.
Yeah.
That's it from me.
Thank you. The next question is from the line of Jatin Damania from Swan Investment Managers. Please go ahead.
Sir, thank you for the opportunity and congrats on the good set of numbers. Sir, carrying on to the previous participant questions in terms of the patented product. Now, since you indicated that the volume will be 5,000 per ton on the monthly basis, but can you help us in understanding what would be the margins or the EBITDA per ton as compared to the current product mix on the patented product?
I can give you an indication because it is a recently launched grade. We, just patented it and just introduced in the market. Our expectation is that it will be around maybe $1,200, $1,300 kind of, contribution per ton.
So that means it will be almost 4 to 5x at the current on the base grade, and we can assume it, right?
Yeah. Roughly.
Okay. Sure. And the second question, now with the ramp up of the Tamil Nadu and the Chennai facility that will be starting in October 24. So if one wants to look at the longer term horizon, probably 4 years, 5 years down the line, what are the volume growth drivers one should assume? Are we planning to look at some acquisitions or looking at some another round of expansion in Tamil Nadu or Chennai for the base grade and the specialty grade?
We believe, that with the kind of potential which is there in the market, we believe that we'll have to keep adding capacity every year. So, sometime it can be through brownfield, sometime it could be greenfield. And in terms of inorganic opportunity, if something comes up, it is nothing available in the market as such. But if something comes up at a valuation which is acceptable to us and if the portfolio is right, we may also consider that.
So with the current land bank, Yeah. So with the current line, then what is the brownfield expansion we can do in both, tire carbon and the specialty one?
Would you repeat? Your voice is not clear.
So with the current line bank that we have, what is the incremental expansion we can carry on in the base grade and the specialty grade?
Okay, I'll tell you both about rubber black as well as specialty. In down south in Tamil Nadu, we can add another 90,000 tons of brownfield capacity. It will be mostly rubber grade for tire application and industrial application. As far as specialty is concerned, we are already working on this additional capacity in Mundra, which will be ready within a year's time. And in parallel, we have started working to look at the possibility to add something more over there. But we have still not decided on the exact capacity of the reactor design. So can't make any comment beyond that at this point of time on specialty.
Okay, so as of now, we can probably work with the 20,000 tons of the specialty which will come in October 24, and the rubber black of incremental 90,000 whenever we decide in the future, right?
90,000 additional rubber black facility over a period of, say, next year or 2 years' time maximum.
Sure, sir. Thank you. That's all from my side. I'll come back next year.
Thank you.
Thank you. The next question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Hey, good afternoon, sir. Thanks for taking my question. Starting with our energized brand, which is a battery chemical. Earlier, I think a quarter or two back, you said that we are very close, and now we have supplied the sample. Can you elaborate more, particularly in battery chemical? What is the component we are looking at it? What is the present opportunity? How critical that element is, and what does our internal assessment talks about our ability, and what are the other opportunity within the battery, if at all we are looking beyond this product?
Okay. So Sanjeev, there are in market currently there are 3 types of battery technology. One is the old technology, which is called dry cell. The second one is lead acid battery, which is second generation battery technology, and the latest one is lithium ion technology, which is the high-end, batteries with high power storage and all. We already had grades which were catering to the first generation battery, dry cell. What we have developed now is going to cater to the second generation and the third generation battery.
Okay.
Right. And in terms of where we have reached in terms of capability, see, there are different kind of grades which can be manufactured, and we are targeting grades with more capacity. So the grade that we have launched is kind of a interim capacity or little less than where we would have wanted, the conductivity to be in these particles. So while this will cater to lithium-ion batteries also, but this will be like low end of lithium-ion batteries, not a really high-end Tesla kind of batteries. Those grades are still at the lab level in our R&D lab. And this Energia grade that we have launched, we have already, given the samples to one of a very large EV manufacturer who also is into the dry cell manufacturing. For this, at lab testing level, it was successful at their end, and now they are testing it at industrial scale.
Fair enough. That's quite useful. The second one is on the specialty. There has been a sharp acceleration in the volume. What is driving it? More of a coating or pigment, which is rubber? What within the specialty is driving this growth, and what has been the catalyst? Because it has been a very smooth and steady growth, but it looks like there is a step-up jump this quarter. Can you elaborate more on that?
One is we got additional capacity during the quarter with Mundra specialty line getting commissioned.
Correct.
That gave us this capacity cushion. Second, generally, demand for high-end things have gone up, be it fabric, be it automotive and all. So that's where, specialty gets consumed more. And also, our market penetration has also increased. We have added number of customers. So, which is, this, the foundation was already laid. When we gave the annual guidance about the volumes, etc., most of the work is already done. So now that we have capacity, we are able to sell more volume.
No, the guidance was that we will sell 10,000 metric ton more versus previous quarter, and in one quarter we have sold 5,000 more. It appears that we are way ahead of our guidance.
Our annual guidance, Sanjesh, was for 50 to 55,000 tons of specialty for the year, and we remain on track. The first 6 months, volume is about close to that 27,500 tons.
Fine, I got it. No, I remember it as 10,000 additional, but got the point. And number 3 on the operating cost particularly, now that the Tamil Nadu has come in, but our total operating cost sequentially has come down. Can you explain that, Raj? How is that?
No, our operating cost structure remains very lean, and the cost structures, cost structure, if you were to discuss, not only operating but overall cost structure, we expect about 45 crore of depreciation on a full year basis, roughly about 30-35 crore of interest cost, and plant maintenance costs, plus manpower, etc.
No, if you look at other expenses, last quarter was 149 crore, this quarter is 144 crore, while we have operated the first phase of Chennai plant for the full whole quarter this quarter, which was not there for the last quarter. And yet our other expenses has declined by 5 crores.
Okay, you're talking about the other expense,
Yeah.
Right? So last quarter, there was some fees, etc. also, which were paid during the quarter, and which appeared here, which was more of a one-off.
Got it. So this 144 crore is a steady state from here on, or because of phase 2, there will be a little bit more increase?
So the current quarter is reflective of the annual run.
This will be for the full operational plant, right?
Yeah.
And we were supposed to commission 24 megawatt of power, and we have started with 12. The other 12 should commission soon?
It should take us about 3 to 4 months more.
Okay. That's fair. And one last question on the global market. Europe is supposed to remove that quota of buying from Russia starting, I think if I remember it right, July of next year. Are we in active discussion with the large player Europeans to have a long-term contract for buying carbon black and ramping up Chennai facility faster than what we thought? I think even in this quarter, we are already at a 50% utilization, which I think is a very good run rate to start with. You expect this ramp up to be much sooner than what we have earlier anticipated?
Tamil Nadu ramping up, the major hurdle now in terms of capacity utilization, I would say, is approval from major tire customers. And it is more of this process, which is taking time, not any problem assets which is delaying the process. The normal process itself takes about 2 to 3 quarters time for all the approvals to come by. And tire accounts for almost 65% of volume offtake. Right, and we believe in next 3 to 4 quarters time we should reach 80% plus capacity utilization. But we expect gradual ramp up from here on. So whatever volume we have been able to do in current quarter, next quarter volume should be better from the current quarter, and fourth quarter should be even better.
So the emphasis is what? More domestic customer or more European customer? Chennai is a sweet spot for us, right? Considering the port, we are very close to the port.
The mix would remain, geographical mix, Sanjay, would remain more or less similar. So maybe about 2/3, 1/3, 2/3 domestic market, 1/3 overseas market. That's how. But in the interim, till the time we have approval from all the tire customers in domestic market, we are just trying to utilize capacity by selling more in overseas market.
Got it. Fair enough. Thanks for answering all my questions, and best of luck for the coming quarter.
Thank you. The next question is from the line of Dhiral from Phillip Capital, PCG. Please go ahead.
Yeah, good evening, sir. Thanks for the opportunity. Sir, in next 3 to 4 quarters, you talked about Tamil Nadu plant will reach 80% utilization. Am I right?
Yeah.
So this is overall 147,000 ton you are talking about?
See, with product mix and all, the real capacity would be somewhere around 125 to 130,000 tons, or roughly 10,500 tons a month, roughly.
Okay, got your point, sir. And sir, any debt reduction plan, in next 2 or 3 quarters, since we have generated a very good cash flow in the first half?
Sorry.
Sir, any debt?
If you look at our debt equity ratio, leveraging is already there, hardly there. It is, I think, 0.22, on a standalone basis.
No, so going ahead, our working capital, which is there right now, short-term borrowing, which is around 550 crore, that would remain same, or we would like to use from the internal accrual?
Working capital, I mean, if you look at total days, I mean, we had on a net basis, we had just about 700 crore, 650 odd crore of debt as of 30th September. And the cost of debt is also very competitive. Our average borrowing cost is sub-8, I mean, long-term, short-term, all included. And we mentioned that we are in a high growth path now. Next 5-7 years, we expect to add capacity almost every year. So some debt would remain on book, but philosophy-wise, we want to go down on debt. Maybe once we are through with our capacity expansion program, then we will pay our debt completely.
Okay. And so just last one question, sir. For the domestic market particularly, do we expect any higher volume growth, at least for next few quarters, since the capacity has been added even by the other peers, as you talked about? So what kind of volume growth we are expecting in domestic market?
I would not say domestic or international, but our focus would be to ensure high capacity utilization. And the guidance that we gave for the full year, we are on track to achieve that.
Okay. Thank you so much, sir.
Thank you. The next question is from the line of Shailesh Raja from B&K Securities. Please go ahead.
Yeah, thanks for the opportunity. Sir, I have 2 questions. So you are saying only gradual ramp up in production from Chennai facility, but due to lower tax rate and also expected better production yield in Chennai facility, is it possible to shift the production from existing plants to new Chennai facility? And also, I need to understand basically how easy to get the customer approval for shifting the production, and how long it will take to get customer approval for change in production facility. And also, which customer will be taking approval for all our facilities, or particular customer will be taking approval only from the particular facility will be supplying? So how this will work in our industry? Can you explain, sir? It will be helpful.
You are right, Shailesh, that Tamil Nadu from tax point of view is more efficient. But when I said gradual ramping up of volume, it is only because of the process involved in the grade approval, right? The quality approval by the major tire customer. So even if we vacate PCBL capacity, it doesn't mean that we can utilize Tamil Nadu capacity. And we believe in next 6 to 8 weeks time, these approvals should start coming in. And once we have these approvals, then the ramping up would be faster. When I say 4 to 6 quarters, it is very conservative. Maybe we will be able to achieve higher ramping up, but it is like, we feel that there can be some things which we may not factor in now, and therefore it is better not to create expectations of full capacity utilization before that. But our focus would be to ensure to get those approvals faster and, utilize capacity to the maximum extent possible.
Okay, great, sir. So my second question for the incremental volume growth for next 2 years. So how much you are betting on new customer wins and how much it will come from increasing share of business from existing customers? In percentage terms, if you could give, then it will be very helpful. And also in Europe, so we are expecting orders from new customers or again, they are increasing share of business with existing customers. And also, can you share what is our landed cost there in Europe versus Russian carbon black? So by the next 2 years, how much volumes you are expecting from Europe market due to this ban on Russian carbon black from next year? So can you explain this?
Okay. So, Salih, so far as tire customers are concerned, domestic or international, we are already there. We have existing relationships with most of them. And therefore, in that space, new customer addition will not be many. I mean, there will not be too many numbers. New customer addition is primarily happening in the area of performance and specialty grades, where we are also launching newer grades, every year. In terms of potential in Europe, like I said, that we look at Europe as geography with large potential, and we have been last 3-4 years we started investing in our supply chain capabilities there. So that holds potential. Our aspiration is to increase our volume from the current level to at least 2x in the next 2 years time, right? And it is growing rapidly. Like I said, 2-3 years back we were hardly doing any volume. Our share of Europe in overall international volume was just about 3-4%. And from there, last year we clocked 14%. Europe currently is going through a slowdown now, so therefore this year may not be the right year to track performance in terms of volume growth, etc. But structurally, it holds a lot of promise. And that's how we are looking at this geography. We are building up relationships, setting up our own offices, investing in distribution capabilities, supply chain capabilities.
Okay. So what is our landed cost difference between PCBL or any Russian carbon black?
Yeah, we are competitive, Alex. I mean, landed cost would also depend on what grade we are supplying. In terms of logistics cost, we incur just about $40-50 a ton. And which is not much because even when we are supplying in domestic market, to tire customer, our average cost works out to around 2,500, 3,000 rupees. So if we are incurring $40-50 for overseas sales, because it is not a, it doesn't have impact on the margin of the business.
Okay. Yeah. Okay, sir. Thanks.
Thank you. The next question is from the line of Bala Subramaniam from Aryan Capital. Please go ahead.
Good evening, sir. Thank you so much for the opportunity. I'm new to this company. So I just want to understand how much we have invested for this Chennai and Mundra plant and what kind of asset turn we can expect in these investments.
Mundra, so there will be, this capacity addition is happening in 2 phases. One is already commissioned and the second will come up in a year's time. Between these 2 lines, we estimate a capital outlay of about 330-40 odd crores. A good part of that is already spent, about 220 odd crore is already spent because a lot of infrastructure is common. Tamil Nadu, we expect the overall project cost to be about 950 to 1,000 odd crores. But then again, I mean, the spending that we are doing will also, kind of have some kind of civil infrastructure creation for the next phase of brownfield expansion.
So what kind of asset turn we may expect, sir, in those investments?
So on a full, capacity utilization basis, and at current crude prices, we expect to generate about 1,400 kind of revenue, 1,400 crore kind of a revenue on a full year basis from Chennai.
So including both investments, right, sir? This 950 crore, another 340 crore.
So that 200 crore is Mundra. This is not Chennai. So I am talking about Chennai. And on Mundra side, we should be able to generate about roughly about 200 crore kind of revenue.
Okay, sir. Okay, got it. Thank you, sir.
Annual revenue from that facility.
It's incremental revenue, right, sir?
From the phase 1 facility, right? From the phase 1 facility.
Overall, sir, in phase 2, phase 1?
Would you please repeat?
So overall Mundra plant capacity, like asset turn or incremental revenue. So around 200 crore incremental revenue from Mundra facilities, it's only for phase 1 or it's included both?
Phase 1.
Phase 1.
200 crore is from phase 1.
Okay, sir. What about the phase 2, sir?
Phase 2, the line is still under designing, so it will also depend on the product mix and all. We expect a similar kind of revenue from that line also.
Okay, sir. Okay, got it. Thank you.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello. Am I audible?
Yes, sir.
Go
ahead.
Yeah, thank you very much, sir, for this opportunity. So first of all, I just wanted to understand, I mean, this quarter our EBITDA per ton was around 18,200 odd. And I think the mix of specialty was also high in this quarter. So just wanted to understand what sort of sustainable EBITDA per ton we are looking at maybe this year or next year, as we also, I mean, tend to increase the share of specialty volume. Yeah.
So this is sustainable. See, the market is not in best of the situation currently. Domestic market remains oversupplied, and international market, we all know there are problems. There are geopolitical issues, there are growth issues with global economy. Right? And therefore, whatever we have made is just not only sustainable, but we expect that next 3-4 years, because of changing product mix, increasing efficiency and operating leverage, we can further improve on it.
So 20,000, would we look to target 20,000 kind of a range in next 2 to 3 years?
Yeah, our guidance was 2027. We expect it to be around that level. It may happen before that also.
20,000. Okay, fair enough. And in terms of volume, I mean, overall at the company level, what sort of growth we are expecting over next 2 years? I think we were at about 450,000, right, in FY23. And we do look to improve our capacity utilization, as you mentioned in one of the comments.
So we believe that next 5-6 years we can grow at lower double digits, maybe 12-13% kind of growth.
12-13% volume growth CAGR, right?
Yeah.
Okay, understood. That's very helpful, sir. I think that's it from my side. All the very best to you. Thank you.
Thank you. The next question is from the line of Vallabi Rungta from Robo Capital. Please go ahead.
Hi, sir. Sir, so other day I was reading this article which says that some of your clients are talking about switching to silica instead of using carbon black. So I would like to have your view on this and what price difference between silica and carbon black per kg or per metric basic ton you are seeing. If you could guide me on that.
The silica quality has been there since ages. It is not a new discovered material. But while carbon black has both filler and binder ability, silica on its own doesn't have that additive capability. And therefore it requires to be mixed with some other additives for it to be used in tire compound. Also, it is very corrosive for tire equipment, and therefore even now most of the tire companies are using only very small fraction of silica in their tire compound, and that too from showing that they are adopting green practices. So, I mean, from that perspective, it is not a replacement in real terms of cars.
Okay, got it. Thank you.
Thank you. The next question is from the line of Omkar Kamtekar from Bonanza. Please go ahead.
Hello, thank you for taking my question. So first question is, say about 3 or 4 quarters down the line, what will be the blended capacity utilization of all, say, our total capacity currently stands at 770 tons, metric tons. So what would be the 1 year down the line blended capacity utilization?
I guess in a 4 to 6 quarters time we should be reaching our full capacity utilization. But then this 770 is nameplate capacity, which can be achieved only if we were to manufacture one grade all the time.
Okay.
With the pack mix that we have, we can go up to maybe 625-30,000 tons. That's maximum that we can achieve. And
At the current
in 4 to 6 quarters time, we should be reaching the peak capacity.
Okay. And sir, would it be possible to give a segment-wise capacity breakup as to how much of the total capacity is for specialty black, Gerber black, and others? Is it possible?
Specialty, as of now, we have 92,000 tons, and in a year's time, we will have another 20,000 tons. Right?
Okay.
I'm talking about in terms of the gross capacity, right? The breakup of 770.
Yes.
And rest is capacity which is fungible between tire grades and the common grades.
Oh, okay. So 92 is the current specialty black plus 20 which will be coming about in a year's time, and the rest is fungible. That is correct. Okay. And finally, sir, with respect to from a longer term horizon, this was covered to a certain extent by the comment in the previous question. So 20,000 could be achieved, say, by FY25 end is will be an optimistic thing. Basis the crude oil being benign and capacity, our growth being in double digits. So we can reach, say, a quarterly run rate of revenue closer to 1,600 or 1,700 crores. Would that be a fair assumption?
Yeah, that's possible. So if crude were to remain stable, then volume growth will reflect on the top line. So if we are saying 12-13% CAGR volume growth, that would also reflect on our top line if crude price is able to remain same, and if there was no change in our product mix.
Okay. So product mix would also play a big role. Yeah, you are right on that.
Yeah, our product mix is also improving.
Correct.
Every passing year.
Right. And on the product mix, the specialty black, what is the EBITDA per ton on the specialty black? Can you disclose that?
We roughly make about 2.5x of our tire grade margin in.
Okay. 2.5 times. Yeah. Thank you. That's it from me.
Thank you. The next question is from the line of Harshil Mehta from Mehta Vakil and Company Private Limited. Please go ahead.
Yeah. Good evening, sir. Lately, we've been reading a lot about the chemical industry being affected in general by dumping by Chinese companies. Is this something that affects us for our portfolio of products, or is it something that the Chinese industry is no longer as competitive for carbon black and specialty black? Thank you.
In our case, what we are witnessing is that their cost structure is adversely changing for them. And therefore, last 5-6 years, they have not been very prominent in terms of pushing their material in India and surrounding geographies. 30-35% of our volumes we are selling in overseas markets, which is a level playing field. Even in India, there is no anti-dumping duty now. But despite that, we could not only increase our volumes in overseas markets, but also we could improve our margins. So that's a reflection of, either improvement in our capability and also simultaneously, some problems that they're in. What we understand is that their cost structure is now not supporting this industry. And therefore, there is a structural consolidation which is taking place there. So while they still hold largest capacity, globally, but in terms of price competitiveness, they are not where they were, 5-7 years back.
Okay. Thank you so much.
Thank you. The next question is from the line of Mahesh Atal and Associate. Please go ahead.
Sir, congratulations on good set of numbers. My question would be that coming to the master batch industry, what is the current, scenario that we are looking at? Like, are we? We stand to be, I think, top player supplying the carbon black to that particular segment. So can you just please throw some light on how that industry is operating currently? And are we also looking at some other channels? Have there been like we are supplying to tire industry and everything and all, but are you also looking at some other new channels altogether which are opening up for us as a company? If you can just elaborate on this.
Would you please repeat your question? I couldn't understand.
Sir, the thing is that first thing is, hello, am I audible, sir?
Yeah.
So basically, the thing is that what is the lookout for the the master batch industry? I think we are a biggest supplier to the master batch industry, and lately we are saying that there is a huge demand of black master batch coming in the market. So are we? What is the growth coming from there? And also, I was just wondering, like, we are already supplying to tire industry and all that industry since a long time. Are there any new channels opening up for us as a company where we are seeing that there's huge demand? Maybe in future it may come up, or are you also in talks? So as an industry, we are able to supply to the entire industry assets. I'm talking about the opening up of new channels. So if you can elaborate on.
New channels, there are a lot of.
Sorry, sir. Hello.
Yeah, Mahesh. In terms of opening up of new channels, there are a lot of newer solutions that we have been creating, through our R&D initiative. And earlier, like primary use of carbon black was in tires and rubber, and now it caters to all sorts of different industries. In terms of the latest, evolving opportunity, it is the conductive segment. The battery storage industry is growing very rapidly, and that creates a large opportunity. And that's where currently our company is focused upon. Right, so a lot of work is happening on that front. In terms of your question on master batch, honestly, I'll not be able to comment on that. Maybe I'll revert to you, once I have spoken with our specialty marketing head. Maybe we will have some view on that.
Also, sir, okay, just to add on to this. So when you say that there's this conductor industry itself is so big that you're also working in that direction. So are we just looking at domestic market, or we are opening up the entire world markets for this particular segment?
No, Mahesh, so we don't consider India as our only market. We are a global company, and we consider entire globe to be our market. Even now, almost 70% of our specialty volumes are sold outside India. And we have a very strong customer connect and supply chain network outside India, globally, in fact. So the opportunity is everywhere, not only in India.
And do you see that Indian markets growing in this particular segment?
Yeah, India is also growing rapidly, but it is, I think, this opportunity is evolving across all geographies. Most of Europe, even Asian countries, and India included.
Oh, okay. All right, sir. I think, thank you. Thank you.
And thank you. The next question is from the line of Radha from B&K Securities. Please go ahead.
Hi, sir. Thank you for the opportunity and congratulations on good results. So I wanted to ask on that patented products, you mentioned that we could do 7 to 8K tons. Now, every year in specialty, we wanted to increase our volumes broadly by 10K tons. So is that included in this 10K, or it will be over and above that?
When we give long-term guidance, Radha, it is like something where we have very high level of confidence, right? And this is usually a conservative guidance. Now, the grade that we have launched and we got patented is, some grades which got developed in our R&D lab. But having said that, every year we are launching some 8 to 10 new grades. So it is just part of those new innovations or products which we are developing every year. So I would not say whether this will be outside that guidance which was given to you. our efforts will be to obviously maximize the opportunity which is there, right? But we believe that 10,000 tons incremental volume every year is something that we should be able to achieve.
And the production of this will start from?
Production has already started. For these two grades, production has already started.
Okay, sir. And so, wanted to understand now that all the capacities that are expected to be commissioned for this year is done. So, what would be the maintenance capex expected from this year onwards?
We incur about roughly 12-13 crore of maintenance capex per plant every year. Right, so now that we have 5 plants, it should be around 60-65 odd crores annually.
Okay, sir. And sir, lastly, just wanted to confirm if I heard it right. So Chennai plant volumes for first half FY24 would be 14K tons, which is 5K in 1Q and the remaining in 2Q.
Correct.
Okay, sir.
Correct.
And sir, lastly, sorry, sir.
Yeah, please continue.
So lastly, in Mundra, we do have some extra land. So, so for that extra land, just wanted to know whether we are looking in future if we do expand after phase 2. So will we be expanding in specialty products or are we looking for some other new opportunities?
In all likelihood, it will be a specialty line only.
Okay, thank you, sir. That's all from my side, and all the best.
Thank you. Ladies and gentlemen, that was the last question for today. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect.